Events that events after a reporting period. What are the events? It is always a time lag between the end of the reporting period and date on which financial statements are approved for use. What is 31st March is one date, and the approving date may be different. So this is the thing you want to know. Okay. So as the question arises, should the event that occurs between the said 2 days has an impact on the financial statement? Yeah, because when there is an date difference between 31st March and the report date, there may incidents happen. What are the incident? Fire may happen, accident may happen, any big changes may happen. So these are the things that may affect the financial statement indirectly. Example, in a fire, all the stocks are destroyed. On 31st March, stocks were there, but on 1st April, stock was destroyed. Where this is a significant event, do I need to report it in the statement? Or sometimes the assessee may die, did after 31st March. Until that, he is there. After that, he is died. So, do we need to report that? Or he has an debit ITAR. It's a huge ITAR. He became insolvent within from the date of 31st March to reporting date. Do I need to report this? These are the various circumstances that may arise. If yes, to what extent we need to report, and how should these be affected? How should this be reflected? Should these to be disclosed? What should be disclosed? What not should be disclosed? Indian accounting standard Ind AS 7 provides a guidance on this and similar issues. So these issues Ind AS 10 is speaking about. The objective of the standard is to prescribe what they need to prescribe. They're asking when the entity should adjust its financial statement for events after the reporting period, whether they need to do or not, and when they need to do it. This is the question. And disclose the entity that the entity should give about the date when the financial statements are approved for issue and about event after the financial statement. What are the event that I need to disclose? What are the event I don't want to disclose? Everything they need to see events after the reporting period. What are that or those events? Favorable and unfavorable. Ask what is it's a favorable event or unfavorable event occurs between the end of the financial reporting and the date in which financial statements are approved by the board of directors in case of company or the corresponding approving authority in the case of other entity. So who will approve this financial statement? In the company, directors will approve. In other cases, in the case of individual will do. In partnership firm, partners will do. HUF, Karta will do, and trust members will do. So these are the person who will approve the financial statement. Adjusting event after the reporting period, non-adjusting event after the reporting. What is an adjusting event? Those that provide evidence for a condition that exists at the end of the reporting period. So they have evidence. Those that is indicative of condition that arose from reporting. So that is in that it is indicating that arose from the reporting. You will see that in explain. We should see in detail. Adjusting event after reporting period, non-adjusting event after reporting period. So this adjusting event we need to conduct. Definitely we need to disclose and we need to report the events and the what has happened. Non-adjusting event, that event has happened, but it is not giving any financial impact, but it may arise. We need to identify the event, but there is no transaction point of it. Exception when there is a breach in the material provision of long-term loan arrangement or on before the end of the reporting period, where the effect of the liability becomes payable on demand on the reporting date. The agreement by the lender before the approval of financial statement for issue is not demand payment on the consequence of which shall be considered as adjusting event. What I'm saying, they're giving an exemption on one thing. What is that exemption they are giving? So in the case of loan on 31st March, it is not repayable. But on 1st April, the company is saying repaying it. It's a long-term loan. Do I need to convert to short-term? This is a question. So there's the exemption given in this case. Events after reporting period, adjusting event need to change, non-adjusting event just need to disclose. Adjust the financial statement. No adjustment to be needed. Like financial statement in case of non-adjusting event. The following is an example of adjusting event for after the reporting period that requires the entity to adjust the amount recognized in the financial statement or to recognize items that are not previously recognized. Whether need to recognize it or not recognize it. These are two things we need to see. Okay. Settlement in court case. What is that settlement? The settlement arrived what after the reporting period of the court case that confirmed the entity has present obligation to end the reporting period. And 31st March, there is no judgment. But on 2nd April, I received a judgment. That judgment state you need to pay this much. So this pay, this on 31st March, there is no legal liability. But on after 31st March, between the reporting period and report of balance sheet, there is an contingent liability that doesn't there is no contingent liability. Actual liability has been raised due to the contingent liability in the books of account. In this case, the entity adjusting and previous recognized provision relating to the court case and under as per Ind AS 37 provision, contingent liability, contingent asset, recognizing a new provision. They need to recognize a new provision. The entity does not merely disclose a contingent liability because the settlement provides additional evidence that would be considered according to para 16 of Ind AS 37. So, as per Ind AS 37, you need to consider whether the contingent liability is there. Now, you should consider the contingent liability to liability. Contingent asset is there. Now, you should consider to asset. As per that, Ind AS 37. Some examples of non adjusting events after the reporting period that may generally result in disclosure as the following: announcing a plan to discontinue an operation. Sometimes the company says, sir, we are doing an operation. Right now, due to the financial situation, we don't want to continue. So on 31st March, it is operation. But after that, this became discontinuing operations happening. So what should we do? We need to disclose it. Destruction of major production plant by fire after reporting period. This is to be disclosed because it is a material thing that is going to affect the going concern. If it affects the going concern, we need to report this kind of thing. Dividend. If an entity declares dividend to shareholders, the entity instrument after the reporting period, the entity shall not recognize the dividend as a liability at the end of the reporting period. So even though they declare dividend is as for 31st March, dividend is not paid. When it is paid, it should be when it is being paid, that period need to be considered. So in this case, it is not pertaining to 31st March. Going concern entity shall should not prepare a financial statement on going concern basis if the management determines after the reporting period either it intends to liquidate the entity or to cease the trading as that it is not realistic alternative to do so. What are saying? So the company is there. The company is thinking we need to liquidate. So when it came to liquidate, we can't go for going concern because it is there is no foreseeable future of the business. They're going to liquidate or they're going to seize the business. If they're going to seize the business, we can't say it is viable to run the business. It may be noted the entity shall make disclosure as specified in DAS 1 a presentation of financial statement if the financial statements are not prepared on going concern. If it is not being prepared as per when, going concern, you disclose. So this entity is not be going to be going concern because of this event. The events is closure or seizure of operation, everything. Management is aware of material uncertainties relating to events or conditions that may cast significant doubt upon the entity's ability to continue to going concern. So some management may think, though there will be a problem. So what are the problem need to see? Events and conditions required disclosure may arise after a reporting period. Sometimes, usually, from 31st March to that date, it may happen. We should be very careful. Date when financial statements are approved for use. When will be used? The standard requires the entity to disclose what they are required entity to disclose. Date when financial statements were approved for issue. So prepared as per 30 verse 3. But when it was approved, we need to disclose it. Who gave the approval? Director, partner, trust members, individual who gave the approval. You see, the fact the entity's owner or other have the power to modify the financial statement after use. So if it the fact the entity is one other has the power to modify the financial statement after use, who has the power to modify? You should disclose them. A disclosure necessary as it is important for the user to know when the financial statements were approved for issue, as the financial statements do not reflect the events after the date. So why they are asking you to disclose? So did these events are happen between the date of recognition accepting the financial statement and this is the 31st of March, and if any events are happen, why these events are not being recognized? So that question should arise to the intended user if there any problem arises. For that only they're saying a reporting disclosure after about the condition at the end of the reporting period. What is the updating disclosure? What are the updating disclosure condition? The entity receives information after the reporting period about condition that exists at the end of the reporting period. So they received information on the end of the reporting period. Each shall update disclosure that relating to the condition and the light of the new information. They should this is the new information. We are disclosing it. We come to know about on this date. We should say if a non-adjusting event after the reporting period is material or non-disclosure could influence the economic decisions of the entire user, make the basis of financial statement. The entity should disclose the following each material category of non-material non-adjusting events after the reporting period. Sometimes there will be some non-adjusting events. If you may think it is not adjusting, no need, but if the auditor thinks so, if you think so, it is material and it may affect the future viability of the organization. You need to disclose it. You need to disclose it. What is the nature of the non-adjusting event? Estimate of the financial effect. What is the financial estimate? Or how much? What is the statement? That estimate cannot be made. So this is the material thing. What is it? You know, how much amount it will cost? If you're not able to find this amount, you may say you should explain the material, explain the situation to the intended user so they can understand. Distribution of non-cash assets to asset. What is that? Appendix 10 A of Ind AS 10 provides guidance with the reference to distribution of non-cash asset as dividend to intended user. So dividend we need to give. Dividend usually how they will give, cash they will give. How the cash will be given based upon the ratio of the holding they will give. If they not able to give and there's no cash, non-cash dividend should be taken. What's non-cash dividend? It is asset is being partition given to the shareholder. This is the non-cash dividend. So the appendix prescribe that the liability to pay dividend shall be recognized when the dividend is approximately authorized and no longer is discretion of the entity. So they have recognized this as a dividend and they have passed a resolution and approximate authority so that no longer discretion of the entity. Entity can give this is asset of the shareholder. They can give the liability shall be measured at a fair value of the asset to be distributed. So how we should measure liability should be fair value, and as per the fair value, it should be considered the asset, and that asset should be given to strike off the liability to be given to settle to given to so settle the liability. This is the way you can do. Any difference between the carrying amount of asset distributed and the carrying amount of dividend payable should be recognized at profit and loss when the entity settles the dividend payable. So how they should recognize it? They should recognize in P&L account. You should not directly dividend this asset. So difference in carrying amount of the assets and the difference in carrying amount of the dividend payable. So I gave an asset value of 1 lakh rupees for a dividend of 99,000. So 1,000 is my loss. P&L you should charge. Is I gave an asset of 1.10,000 for one asset value for the dividend of 1 lakh. So now the 10,000 rupees what they gave is profit. That should be considered in P&L account. Okay. So this is as a Ind AS 10. Thank you. We will see you in the next video.